Good day, ladies and gentlemen, and welcome to a short summary recording covering the COVID-19 tax proposals. So, 3 relief mechanisms that Treasury has introduced to provide relief to business. So, some good news for a change. The first proposal relates to the expansion of the ETI age requirement as well as the amount, the maximum value to be claimed. The second proposal that we've received quite a number of queries on relates to the deferral of the payment of employees' tax liability for tax compliant small to medium businesses. And then the third and final proposal is a deferral of the payment of provisional tax liabilities for tax compliant small to medium sized businesses. All right, so the first proposal relates to employment tax incentive. So just to give you the background to this, employment tax incentive has been around since Jan 2014, and that basically incentivizes businesses employing the youth of this country, and that would be anyone between the ages of 18 and 29, and also someone earning a maximum of 6,500 Rand per month. So in terms of this relief, there is then a value to be placed on this relief, and that is capped at 1,000 Rand per employee for the first 12 months of service, and thereafter 500 Rand per employee for the second 12 months of service. That therefore means that you can only claim ETI for a maximum period of 24 months. So provided that you're employing someone in this age bracket between 18 and 29, this person earns less than 6,500 Rand, and only for the first 24 months, you would then qualify for ETI relief. So prior to you paying over pay as you earn to SARS, you withhold a portion. A portion is basically a rebate that can be claimed by the employer, and the balancing portion is then paid over to SARS. All right, so the details of the proposal. It is a 4-month relief period commencing 1st of April 2020, and it's deemed to come to an end 31st of July 2020. It's only available to employees who are registered with SARS on the 1st of March 2020, so no new employees. Now, there are 3 parts to this proposal. The first part is there's an increase of 500 Rand to the maximum benefit or relief that can be claimed. So that therefore means in the first 12 months of service, it increases from 1,000 to 1,500 Rand per employee. And in the second 12 months of service, it increases from 500 Rand to 1,000 Rand per employee. So it's an increase in the value. Secondly, more employees will now qualify for this benefit, meaning not only employees falling into this age bracket, they're also now providing an additional relief of 500 Rand per employee per month for a person between the ages of 18 and 29, even after the 24-month period. So remember, ETI traditionally is only claimed for the first 24 months of employment. Now you can still, during these 4 months, claim ETI for these employees, even though you've already claimed for 24 months, right? Secondly, also, employees not falling into this age bracket, i.e. they're between the ages of 30 and 65, will now also qualify for the relief of 500 Rand. So that's the second part. That is basically expanding on the scope of employees that would qualify for the relief, and that would benefit the employer, obviously. And then thirdly, in terms of claiming an ETI refund, typically we'd only be able to claim that at the end of each reconciliation period, so the end of Feb, end of August, but now you can claim that every month. So if a refund is due to you, you can claim that immediately. And of course, from a cash flow perspective, that means great benefit to the employer not having to wait for that refund. Right, so very interesting proposal. Let's work through 2 examples together to see how this would work. First example, employer A has 10 workers earning 4,500 Rand per month each. So that therefore means if he has 10 workers, you would now qualify for an additional 500 Rand per worker, and that adds up to 5,000 Rand per month between the period April to July. All right, very simple example. Let's complicate things slightly. Employer B has 3 employees. The employer claims ETI for employee A. So he's in the first 12 months of employment, right? So that therefore means there's an additional 500 Rand that can now be claimed related to employee A. The employer has exhausted ETI claims for a 27-year-old employee B 2 years ago. So you've already gone through the 24-month period, you've exhausted your ETI relief. But that now is a brand new relief stream that has been created, because now all of a sudden there's 500 Rand additional relief related to this employee. And then lastly, employee C is 34 years old, and this employee would not have qualified for ETI before, but now does. So again, 500 Rand additional relief claimable. Right. So these examples are coming from this explanatory note that we received from Treasury, just to indicate that this does mean money in the pocket of the employer, and there's an additional value of 500 Rand for these employees, and they've expanded on the scope of which employees would qualify for the relief. Right, so very interesting proposal, definitely worth your while to look into this if you're employing employees and their salary is 6,500 Rand or less. The second proposal, pay-as-you-earn proposal, that got us very, very excited. So just to give you the background, per paragraph 2, the fourth schedule, you will need to deduct employees' tax from the remuneration that you pay to your employees, and then you need to pay it over to SARS 7th day of the following month. Otherwise, there'd be penalties and interest, right, for late payment, and that's definitely not a position that you'd want to be in. So the details of the proposal, again, a 4-month proposal running from the 1st of April and then coming to an end 31st of July. So this proposal allows for you to defer 20% of your pay as you earn without SARS imposing any admin penalties or interest for late payment, meaning you'd still be compliant, ladies and gentlemen, if you only pay 80% over to SARS. You're still compliant, there's no penalty and interest consequences. But with everything in life, there's a catch, right? SARS won't just forgive that 20%. It's a deferral, meaning that at some stage it will become payable. And that's what this explanatory memo also then explains to us. This is then payable in 6 equal monthly installments commencing from the period 1st of August 2020, meaning first payment is due 7th of September 2020. So the 20% that you've paid less that you were able to defer in April, May, June, July for those 4 months will then be spread and need to be paid back over a 6-month period, and you do that basically starting from the 7th of September. Payment needs to be made. So for purposes of this proposal, this is applicable to any small or medium-sized business with annual turnover not exceeding 50 million Rand. We're also getting lots of questions as to what exactly that means. We don't have a specific definition at this stage. The relief, however, will not be applicable to an employer that has not submitted a return or has outstanding tax debt, unless it's in terms of an agreement or it has been suspended. Right. If the employer has understated pay as you earn for any of those 4 months running from April to July, there will be an understatement penalty. So they're exempting us from any late payment consequences, the 10% late payment consequence and the interest there too, but understatement would still be subject to a penalty. So that's your second relief mechanism. The third and final relief mechanism is a very interesting one, and it relates to provisional tax. So again, the background. Paragraph 17 of the fourth schedule determines that when you're a provisional taxpayer, and all businesses are automatically provisional taxpayers that are non-natural persons, they should make provisional tax payments in respect of their annual tax liability based on an estimate of the total taxable income. So If there's justifiable circumstances, then you can go below the basic amount. But we know that we need to, as a minimum, work with the basic amount. Your first payment is then 50% of the total estimated liability, and that's payable within 6 months after the commencement of the year. And your second payment is the balancing portion, and that's payable on the last day of the year of assessment. Of course, we know that there are dire consequences if you don't adhere to the requirements. So paragraph 27 determines that there's a 10% late payment penalty for the first and second provisional tax payments. And paragraph 20 determines that there's this terrible 20% understatement penalty related only to the second provisional tax payment. Right. So that's the background. Now, ladies and gentlemen, commencing 1 April 2020, and that applies to the first provisional tax payments ending on or after 1 April 2020, but before 1 October 2020. So they're giving me very specific dates, and it's very important that you have a look at these dates because they give me a date for the first provisional payment, and then they say, and to the second provisional tax periods ending on or after 1 April 2020, but before 1 April 2021. So this is effectively a 12-month relief proposal, right? But my first period needs to fall into a specific period, and my second provisional period needs to fall into a specific period. So the proposal is the following. A portion of the payment that you need to make for provisional tax purposes can be deferred, again, without SARS imposing administrative penalties and interest for late payment. So you're still being compliant. The first payment, remember that's now from the 1st of April until the 30th of September, only needs to be 15% of the estimated total tax liability. Just to remind you, typically that's 50%. And the second is only 65% of the estimated total tax liability. Of course, you need to take into account what you've paid as a first. Right. So upon your third and final top-up payment, you then need to pay the balancing portion to avoid interest, but there'd be no penalty consequences. Again, this is applicable to small and medium-sized businesses with turnover of less than 50 million rand. You might wonder, what about an individual, a natural person carrying on a business? Would the natural person qualify for the relief? We're still not 100% sure. So we do suspect that these natural persons, a sole prop running a business, would qualify, but we don't yet have eligibility criteria. A suggestion is that they'd look at annual turnover below 5 million rand and no more than 10% derived from passive income streams, such as interest, dividends, foreign dividends, rentals, etc. All right. When will the relief not be available? Again, when an employer, a provisional taxpayer, has not filed a return or has outstanding tax debt, unless it's specifically allowed. So that's similar to the second proposal that we've just had a look at. Now let's look at the two examples being provided by Treasury. The first example says the company's reporting period ends 30th of June 2020. So that means the first payment would have been made 31st of December 2019 before this relief period. And let's assume the total tax liability is estimated to be 3 million rand. So 50% of that, i.e. 1.5 million rand, would then have been paid 31st of December 2019. The second provisional payment is due 30th of June 2020. So that's during the relief period. So the second provisional tax payment needs to be at least 65% of your total liability. So 65% of 3 million gives me 1950. And then I need to reduce it by the first payment that has been made of 1.5 million. And that means the second payment is only 450,000 rand. It would have been 1.5 million rand. So this taxpayer, from a cash flow perspective, is 1,050,000 rand better off for now. Please remember that this must still be paid. It's not forgiven. Right. Second example, Company B's reporting period ends 28th of Feb 2021. So the first and the second provisional tax period would fall into the relief period. So the first provisional payment needs to be at least 15% of the total tax liability. So if we assume tax liability to be 800,000, at 15% would be 120,000 Rand payable for the first, right? And that's instead of 400,000. So the taxpayer is clearly better off. The second payment needs to be at least equal to 65, so it needs to take you up basically to a 65% mark of 800,000 gives me 520,000. I reduce that by the first and it gives me 400,000 Rand. So the remaining balance, effectively 35%, will then be payable when the third payment is due, and that's your voluntary, which will be due 30th of September 2021 to avoid interest charges. So this, I think, is one of the proposals that is actually quite understated at this stage. And I do think there's a lot of value in you looking into the option of deferring not only pay as you earn, the focus seems to be on pay as you earn, but also provisional tax can make a huge difference from a cash flow perspective for businesses. Ladies and gentlemen, I hope that you enjoyed this very short summary with us. Again, as there's more information that is released, we'll again make it available to you as quickly as we can, and we'll be tackling these issues together.